Hello viewers, in this video I'll be going over silver futures. Today we are up 74 basis points, and on the 1 hour chart we do see we are currently overbought on the 1 hour RSI. We do make a positive MACD, so we have a good possibility on the 1 hour chart to hit this 200 moving average. On the 4 hour chart we do see we still are in negative MACD. We may encounter positive MACD soon. And on the daily chart, we do see a possible resistance as the 9-day moving average act as resistance, same as the 18-day moving average. If we do manage to close above it, I do see a next resistance around the price of $18.50. Reason why, we have a floor back in late August or August 28th. Since we're below that price range, it acts as resistance. So previously it was support, now it's resistance. So if we were to reverse down and head down lower, I do see a next possibility of hitting us or hitting the 50-day moving average, this yellow line. Reason why, we also have a price concentration at the price of $17. So there's support there, and if we were to move down lower, that price movement is roughly around 5.6% or 5.5, and if we were to continue to move on higher, that price movement is roughly 1.7%. So let's head to the forecast model. On here I'll go day by day, where silver will head to the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these forecast models we should focus on? Ideally, the model that is the best match to the current trend. We have the current trend right here, and below it is the trend that I believe is the best match. And this trend dates back to August 30th, 2007 to November 26, 2007. Let me point out why these two charts are similar. So what we have here in the beginning, we start off on the middle Bollinger Band right here. And let's just mark all the instances where it touches the middle Bollinger Band. So we have one right towards the end. Next, let's mark where we touch the upper Bollinger Bands. So in this case, we managed to have a close above the middle Bollinger Band. In the instance of the candlestick was above the upper Bollinger Band, and we have one right here as well. And finally, right towards the end, right here. So we have about 3 instances where candlesticks close above outside of the upper Bollinger Band, and we have one here in the trend in question. So we have one right here as well, and 2 towards the end. So we have the second one right there, and last right towards the end. And let's mark where it touches the middle Bollinger Band. So we have one right down here, and then finally right towards the end as well. So we start to see a pattern shaping, and there's 1, 2, 3, 4, 5 points. We also have 1, 2, 3, 4, 5 points. So there's a reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. And here's the forecast model, and the trend that we just examined was August 30th, 2007 to November 26, 2007. And back then, silver was down roughly 3.8%. And here's the line chart that I compared it to. So we have the current trend right here, and overlapping it is the 2007 trend, overlapping it neatly. So if you want this forecast model, feel free to sign up in the link below and use it when it's available. And that's it. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.